Frosty from Oregon writes, I've been listening to you say that term life insurance is the way to go. Now that we're having our first child, my husband and I think it would be a good idea to get the life insurance. However, I do not fully understand term life insurance. What's the best term to go with? Shorter, like 10 years, or longer? Well, term life insurance is for a term. And how long do you think you're going to need it? I usually recommend 15 to 20 year level term life insurance, about 10 times your income on you. Now in your case, with a brand new baby, I would say 20 years. Because 20 years from today, your baby will be 20. You will have raised him or her. And 20 years from today, if you listen to Dave Ramsey, your mortgage will be paid off. Because I tell you, never take out longer than a 15-year mortgage. And 20 years from today, if you listen to me, you will have been debt-free for many, many years. Other than the home and including the home. And 20 years from today, if you listen to me and you've been investing in a good Roth IRA and 401ks with matches and good mutual funds that have long track records, you'll have $1 million, $2 million, $500,000, something like that, in a mutual fund in your retirement. So let's visit 20 years from today. 20 years from today, the term runs out. Let's say that your husband has had a heart attack or cancer and can't get insurance renewed at that time. The kids are grown and gone, or grown and almost gone. Your house is paid off. You have $500,000 or $1 million or $2 million in mutual funds. And he dies without any life insurance. I think you could probably struggle through. See, becoming debt-free and investing puts you in a position that you are self-insured. However, what usually happens to most families is as they go along, they make more money, their estates get larger, and they renew by buying new term life insurance. When I first started buying life insurance 25 years ago, I got ripped off with some whole life insurance from Northwestern Mutual, and got rid of that crap and got a basic term life policy that was a 15-year. Term life insurance since that time, 20-something years ago, has dropped dramatically in cost because the insurance companies were dealing with antiquated statistical tables known as actuarial tables, and they've updated those to reflect the better medical condition of the average American, lifespan in other words. And they've dropped their prices as a result, and there's a huge price war in term insurance, so they dropped their prices yet again. So I bought term insurance 15 years later, cheaper than I bought it for, even though I was 15 years older. So that's the kind of stuff you can get into. So many times you buy a 20-year level term policy, 5 or 10 years from now you may buy another one, because it may be cheaper. And your life may have changed. You may need more or less insurance. But about 10 times your income is a good rule of thumb. So if you make $50,000 a year, $500,000 would be there. If your wife got $500,000 upon your death, she would take the $500,000, invest it. If she made 10% on that money in good mutual fund investing, long term, then she would make $50,000 a year off the $500,000. What you used to make. We just replaced you. So you don't want to get too much. You have to sleep with one eye open. Okay, we'll be right back with more of your calls. Our phone number is 888-825-5225. This is the Dave Ramsey Show on the Fox Business Network.